Hello, I'm Carolyn Herbert from the Finance News Network, and joining me from Ingenia Communities Group to discuss its seniors accommodation portfolio is Managing Director and CEO Simon Owen. Simon, welcome back.
Thanks very much, Carolyn.
Now, for investors who need a refresher, can you start by giving us an introduction to the company?
Yeah, Ingenia is a seniors living business across Australia. We own and operate 60 rent-based seniors living communities, as well as some of the largest caravan parks or tourism parks on the east coast of Australia.
Now, Simon, you've just concluded your AGM. So what were some of the key messages that were communicated?
Yeah, I think there were three key messages we communicated at the meeting. Firstly, we went through some of the strong financial performance that the group reported to 30 June 2016. Cash flow up 130%, profit up over 20%. Secondly, we upgraded our sales targets. So we increased our new home sales target from 150 to 170 sales for the current financial year. And for the first time, we gave guidance for next year of 260 plus settlements. And then thirdly, we announced 3 acquisitions. So overall, a lot of new news in the AGM, and I think our shareholders were very happy.
And Simon, you recently completed the sell down of your DMF portfolio. What was behind this move?
Yeah, I think we've identified that the largest, fastest growing and least competitive part of the seniors living market is affordable seniors housing. DMF is a great business, but it really targets the middle and upper market. And so we made the decision a couple of years ago to exit deferred management fee, DMF, and redeploy that capital into more affordable seniors housing. And that was really what was behind the decision.
So tell us a bit more about your recent acquisitions.
Yeah, so since our results at 30 June, we've acquired the last A-grade freehold caravan park in Western Sydney in Ingenia, which is near Vineyard. It's a $33 million acquisition, 180 existing sites and vacant land for another 150 new homes. And then today we announced the acquisition of an existing lifestyle community about 14 kilometres out of the Brisbane CBD, the acquisition of a 25-hectare site in Hervey Bay on the Queensland Fraser Coast. And lastly, that we've gone unconditional on Latitude 1, which is a DA-approved site up near just north of Newcastle.
Turning to your portfolio now, how has it performed starting with your lifestyle and holiday parks?
Yeah, look, our lifestyle and holiday parks are performing very strongly. There are 2 components to that. Firstly, our permanent homes. We've got record sales coming through the business at the moment. We're, I think, benefiting from what we call a seniors tsunami, the number of people who are retiring. And also our business model really meets the one of the big crises facing Australia today, which is housing affordability. So we're in a sweet spot of the market there. And then in our growing holidays portfolio with a lower Australian dollar, more people are choosing to holiday at home rather than go overseas. And again, we're a great beneficiary of that. So we couldn't be happier with the way the business is performing at the moment.
And how have garden villages performed?
Yeah, Garden Villages, we're the largest owner and operator of seniors rental villages in Australia. That's a great business. We provide quality accommodation in a gated community for seniors. That business is tracking very well. Occupancy at the moment across that business is around 91%, and we expect to grow that to probably 92 or 93% over the next 12 to 18 months.
And now to a more general question, Simon. What do your properties offer seniors that, say, a normal house or apartment wouldn't?
Yeah, Carolyn, I think there's 3 things that our properties offer. Firstly, we provide great social interaction. So there's always plenty going on in our communities, plenty of social events, and a lot of people, particularly women, are looking for things to do, events, whether it's going out to art and craft shows and the like, restaurants. Secondly, we offer great security. So our communities are typically gated. We have on-site management, so there's a real sense of safety and security. And lastly, we have our Ingenia Care Assist program, where we facilitate the delivery of government-funded, either free or heavily subsidised home care, so that the residents can stay longer in their home as opposed to having to move into a nursing home or similar. So I think we have a pretty unique product offering, which is really finding a lot of take up from Australia's ageing population.
Good. And finally, Simon, what is your outlook for the remainder of FY17?
I think in terms of outlook, we've got a growing asset base which we're looking to integrate. We're pushing really hard to hit our 170 sales for the year, and also have a strong opening moving into the next year. We're assessing around 20 acquisition opportunities at the moment, and that's on top of the 6 that we currently have under option or conditional contracts. And we've got a few new products that we're looking to launch into the market in the next 6 to 12 months. So all in all, I think it's going to be a very busy year for us.
Simon Owen, thanks for the update.
Thanks very much for having me.